will first of all have to calculate what is the profit that they have made before they can share the profit. You cannot share a profit if you do not know. And so that is why I said to you all earlier on, trading profit and loss account is absolutely important. It's the first step. If you're going to do the company account, you first of all have to do your trading profit and loss account. If you're going to do the partnership, whatever other account you're going to do, the trading profit and loss account is step number one. And so the first thing that I would do, so it is supposed to be partnership account, but before the partnership, I have to do the trading profit and loss account. So I have to do my trading profit and loss account. Now let's see if I can just head up quickly. I need about 3 columns so that I could write my figures in order. Now what is going to happen is that I'm going to have to go step 1, and then I'm going to cut, and I'm going to go step 2. So let's call this part 1. So for me to go all the way through this problem, I might have to go part 1, part 2, part 3. Part 1 is going to take us up to gross profit. Part 2 is going to take us up to net profit. And part 3 is going to be the appropriation account. So all those persons who sent me work with only a little bit of something here, this had to go 3 steps. Up to gross profit, then to net profit, and then the appropriation account. Before I do anything when it comes to a trading profit and loss account, so notice I'm closing these markers at this point. Because before I do anything, I have to first of all go through the problem that I have. So let's go through the problem. Look at the paper that you have. What do we have here? I see building at cost. No, read with me please. Building at cost, $50,000. I'm doing Mendes and Marshall. They asked me, Mendes and Marshall are in partnership, sharing profits and losses equally. The following is their trial balance. And so I first of all, number 1, I have to go through the trial balance and the notes. Before I attempt to do anything, I'm going through the trial balance and I'm going through the notes. So I have building at cost, 50,000. I see fixtures at cost, 11,000. Provision for depreciation, fixtures, 3,300. Debtors, 16,243. Creditors, 11,150. Cash at bank is $677. Stock at 30th June 19X5 is 41,979. Which stock is that, people? The opening stock. The stock in my trial balance is always the opening stock. Now, where do I find the closing stock? The closing stock is going to be in the notes. And so some person sent me messages saying, what happened if I do not have closing stock? I have to look in the notes at the end of the period. So is there closing stock? Look in the notes. What does it say? It says stock 1,340. So I did have a closing stock for those persons who send that message. My closing stock is always, it's either in my notes or it's at the end of the trial balance. The closing stock is never part of the trial balance. Moving on. So I have purchases, I have sales, sales, purchases, carriage outwards, and persons asking me, so Miss White, what should I do with carriage outward? What is carriage outward, students? It's an expense. Carriage outward is money that I pay for persons to take stuff to other persons who purchase from us. That's why it is called carriage outward. We pay for goods to be distributed to persons. So there's carriage outwards, discount allowed, and discount allowed is also an expense. We have loan interest. Loan interest is an expense. We have office expenses, salaries and wages, that's an expense. Bad debts is an expense. I see provision for bad debts. And remember, I will always say, Provision for bad debts in itself is not an expense. Provision for bad debts in itself is not an expense. I have to now go to my notes to see what they say about provision for bad debts in order to calculate my expense for provision for bad debts. Now, what did they say about provision for bad debts in the notes? What did they say? Reduce provision for bad debts to $320. Now, this is interesting because right now, provision for bad debts, it's not an expense because we are reducing it. And because we are reducing it, it becomes an income. So it is not a part of my expense. It is to be added to my gross profit. It's not an expense because I'm reducing it. If I increase it, it becomes an expense. If I reduce it, it becomes a revenue. So here we had provision for bad debts in the first place was 400. They tell me reduce it to 320. That means $80 is going to be added to my gross profit as reduction in provision for bad debts. Just as when I have discount received. Discount received is not an expense. That will be added to my gross profit as part of my revenue. Okay? So, that's the point we need to remember here. Don't just look at provision for bad debts and say, that's an expense. I'm going to put it in my expenses section. It is not an expense in itself, Josh. Do we understand that? Provision for bad debts in itself is not an expense. Do we understand that, Tavian? Icon, do we understand that? Provision for bad debts in itself is not an expense. We have to go to our notes. Check the notes to see if there was an increase or a decrease. If there was an increase, the amount that it increases by, and I'm happy I see some persons are writing. If it's an increase, the amount that it increases by is an expense. If there's a decrease, the amount that it decreases by is to be added to my gross profit as revenue. Good. Then we went on to loan from J. Khan. We had capital. Mendes capital was $35,000 and Marshall capital was $29,500. Current account. Mendes has a current account balance of $1,306 and Marshall has a current account balance of $298. Drawings. Mendes took $6,400 worth of stock or whatever out of the business, and Marshall took 5,650 drawings. Then we went to the notes. I must read through the notes before I tend to do anything. It says prepare a trading and profit and loss account and an appropriation account for the year ended 30th June 1996 and a balance sheet. So we have 1, 2, 3, 4 things to do. A trading, profit and loss account, then an appropriation account, and then a balance sheet. So this was not a short problem that was going to be finished 1, 2, 3 and was going to be finished in one little page. I should have seen at least 4 pages from anybody who did this complete problem. Okay, now the first thing I see, stock at 30th June 1996 of $56,340, and I'm reminded that this stock is my closing stock. Then I see expenses to be accrued. Expenses to be accrued. What does the term accrued mean? Owing. It is owing. It is owing, and because it is owing, I'm going to have to add this to these expenses. And what are the expenses accrued? Office expense, $96, and wages, $200. So I can now look at my office expense and say I'm going to have to add $96 to that. Look at my wages, and I'm going to have to add $200 to that. Next one. It says depreciate fixtures by 10% in the reducing balance basis. Now this was something else that only one person stopped to ask me. Miss White, what does reducing balance basis mean? Some of us or some persons didn't ask a question. What does reducing balance basis mean? Could somebody in the class tell me what reducing balance basis mean? Anybody? What do I mean by reducing balance? Yes, Cyrus, go ahead. What did I tell you?
When you know, sorry, stuttering.
Said he's stuttering. Anybody want to help him? The reducing balance basis is that I have to first of all subtract the accumulated depreciation from the fixed asset cost and then find a percentage of what is left. So, depreciate fixtures 10% on the reducing balance basis. When I go back to my trial balance, tell me what was fixtures. What was the cost of fixtures? 11,000. What was the depreciation on fixtures? What was the depreciation before? The accumulated depreciation on fixtures.
3,300.
3,300. So I had to take 11,000, subtract 3,300. What am I going to be left with? We're talking about reducing balance basis. Reducing balance basis for depreciation. I'm working this out on the what? Reducing balance basis. So this was my fixtures at what? Cost. This was the fixtures at cost. This was accumulated depreciation. This was my accumulated depreciation right here. So the fixtures at cost was 11,000. The accumulated depreciation was 3,300. I am now subtracting 3,300 from 11,000. What am I left with?
7,700.
7,700. So for this problem, I am now going to find 10%. 10 over 100 times my 7,700, and that's going to be my depreciation for, and that's going to give me $770 is going to be my depreciation for this problem. My depreciation on fixtures is $770. It's 10%, and they tell me I'm using a reducing balance basis. Remember, there are two methods of depreciation. One is called a straight line. Straight line method is when I'm simply calculating a percentage of the figure of the original cost, no matter how many years. If they say 10%, I would simply be calculating 10% of the cost. That's straight line method. What is it, Jaden? Straight line method. It's a percentage of the cost, no matter how many years we've been using this fixture. Straight line method, 10% of the cost. This time they said no, reducing balance method. It's getting older and it's getting older. So it depreciated by 3,300 so far. It's no longer worth 11,000. It's worth 7,700 now. And so I'm finding 10% of 7,700, which is 770, and that is what is going to go in my expenses. So depreciation, motor vehicle, fixtures, 770. That's what should have been there. Okay, moving on. They also tell us that interest is to be charged on capital. Let's make sure. No, sorry, wrong paper. Expenses to be accrued office expenses, 96. Wages, 200. Depreciate fixtures 10% on the reducing balance basis. Reduce provision for bad debts to $320. Partnership salary, 800 to Mendez, not yet entered. Interest on drawings, Mendez 180, Marshall 120, and interest on capital account balances at 10%. All of these I have to go through first and make sure, take these into consideration before I start doing my trading profit and loss account.